Stock market today analysis for the second trading day of the year, Wednesday, January 4th, 2023. We'll take a look at the futures, take a look at the general U.S. markets. We'll look at the 12 big sectors of the stock market. We looked at interest rates yesterday, so probably won't look at those. And even though we looked at I Have Success yesterday, we'll look at that right now. The whole reason for me to be making these videos is twofold. One, I firmly believe that if you have an internet, you have a bank account, and you spend money at least once a year, at the minimum, you should be selling cash secured put options on stocks that you wouldn't mind owning. You know, the price of things continues to go up. If it's a shocker to you and you're around my age, you should have figured this out when the $5 footlong disappeared. $5 footlong turned into the 7, turned into the 12. It's 2023. You should have really been able to figure out that inflation was upon us going back that far. But let's say you didn't. Let's say you did. Whatever. Either way, prices are going to continue to go up. If the price doesn't go up, it's shrinkflation. They're giving you less. I bought some shampoo. I was like, wow, this bottle seems smaller. Instead of 32 ounces, it was 22 ounces. Same price, 10 ounces less. So one thing that you can do, instead of just complaining, pointing the finger at other people, you can take ownership of your life, take responsibility, and at the minimum, learn how to sell cash secured put options on stocks that you wouldn't mind owning. The other reason why I do this is that if you want to master something, teach it. I want to master more than just selling cash secured put options on stocks that you wouldn't mind owning. That's me, by the way. But that's an easy place to start because I truly, truly, truly believe that if you have all three of these qualifications, bank account, internet connection, spend money at least once a year, there's really no reason why not. And since that fits the majority of human beings, that's what I'm going to focus on. Focus on helping the majority of my fellow human beings. In the description of this video below, there's a link to ihavesuccess.com website. A little bit below that, there's going to be a playlist that says like trading options for beginners in all caps. That teaches you the wheel strategy. It has 5 videos in it. Once you watch that, you'll kind of know how to set up your own charts. You'll have an idea of how to screen for different fundamentals of stocks using a free screener from Yahoo. And in this, and then right here at the 3-minute and get ready, 10-second mark, boom, it was just popped up. That is a link to a video on what on what are some, you know what, I don't know what I'm gonna put something there. I'm gonna put something there, and it's gonna be relevant. I just gotta look through to see what kind of value I can give you. I didn't have a plan beforehand. I'm sorry. I apologize. So, yeah. So let's get into looking at these. Watch that video, and then maybe I'll if I think of another video or whatever, something I can link to, I'll link to something else. We see here we're looking at the futures. Futures are still trading right at the moment. Right now, these are the futures of the 4 big indices of the stock market, and we see the trading day was up, starting the next candle. It was up, but in relationship to what? Because it was down yesterday. Look at this. It traded the whole range, but it only made it about halfway, close to about halfway. If it's going to go higher, it's got to get past this. That 390. Right now it's not doing that. We'll see. Maybe it'll do that. One thing that you can do is this big drop down, right? Started here. You look to see how many trading days does it take to get back up there. You could even do it from here. You can do it from here. How many trading days? Here's a huge drop compared to this drop or this drop. How many trading, and then 3 days in a row drop with a big one. How many trading days has it taken to get back up to the top of here? Well, it hasn't so far. So you could say it's say one. We won't count that one thing. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 trading days, and it's still not even 50% up from where it lost value right there. So what's that telling you? It's telling you some weakness, right? And so that's the S&P 500. Got the Dow Jones. You see moving sideways. Dow Jones moving sideways. Nasdaq starting to move sideways. Russell 2000 moving sideways. Bitcoin futures moving sideways. Probably gonna. I'm guessing, like, after watching the Bitcoin price action for the last year, it basically kind of moves sideways, rallies up a little bit, drops down, moves sideways, rallies up a little bit, drops down. And so I'm just kind of waiting to see if that's going to happen again. Silver, what's going to happen? A lot of times gold leads the way of silver. Now, you may or may not have heard me talking about this, but you can see, I was talking about how there's like kind of this, where's a better one here? Kind of like this line here, right? I know prices went up a little more, but look at this. Look at this. Look how it was, right? That's more pronounced that it was on this upward scale, right? And when it's kind of going flat like this, a lot of times what will happen is the side that stays flat, prices will push past that. And then you can also take a look at your, if the 200-day moving average was also moving up, then it's like, oh yeah, it's probably going to pop to the upside. But since the 200-day moving average was sloping down, I guess it could be relevant on which side of the price action the 200-day price action is to the 200-day moving average. But let's say if it's on the top of the 200-day and it's sloping up, and you see in this pattern, it's like, yeah, it really seems like it's going to pop up. But in this case, we were on the top side of a downward sloping 200-day moving average, and it did pop up like that. So then where prices are at, you see prices got up to about this 1840. 1840 pulled back, couldn't even really get up to the 1840 here. And then it closed above 1840. Now it's opening above 1840, closing above 1840. Now we're up here. What's going to happen? Even if it drops back down here, as long as it's kind of staying above this 1840, maybe it's going to be building a new base. We'll see. Gold is you might not think it's a political animal. You're entitled to your opinion. I'm entitled to my opinion, and I think politics heavily influence the paper price of gold. Silver looks like that might be doing the same thing, right? And generally gold leads the way. So we'll see if silver is going to do that also. Natural gas, it's been moving down. Oh, oil, in a way, kind of going sideways for the last month. I mean, it's a little lower. 10-year Treasury yield pulled back just a little bit. We were talking about that 3.8, and it fell a little bit under that. Right now, at 3.7. VIX futures pulling back a little bit. We kind of went over those, some of those indices. Let's take a look at the markets, general markets of the day. And these three we already looked at. Bitcoin, oil, gold, dollar. Dollar is I don't know if it's breaking out of that range, but it kind of had this range. I mean, it's sort of subjective when you're drawing these ranges. And also, that's not a completely straight line. Look at that. Did you notice that? Look at that. Ooh, that's a crooked line. But it's on the top part of this, but we'll see if it's going to keep going up. If this was not UUP, I would never do this with UUP because I don't ever trade UUP. I'm sure there's a way I could figure it out, but let's pretend this wasn't UUP. Let's pretend it was a company that makes some sort of canned food or something for humans, and we've seen it going in this trading range right here. It might be maybe it would be worth looking at to take some sort of short position on this, shorting the stock, buying a put, selling some sort of call spread, naked call. I don't know, but you see when it's in the downward channel, it's going up to the top, especially if you're going to be selling calls up here, and then you wouldn't want to sell calls down here and have it rally up this way. You want to wait till it rallies up this way, sell the call, and then it comes down. Or you could potentially, you know, it comes down here, then you sell some sort of puts or something. So that is it still kind of in this channel? We'll see. We'll see what happens. It looks like it was up here, now it's down here. Yeah, no, maybe. And upward sloping 200-day. TLT on the month is down. A little bit of rally. Downward sloping 200-day moving average. And the VIX dropped down. I'm waiting for it to get down to 20. Man, it was scooping up yesterday. I hope it starts scooping down tomorrow. I want to get down to 20. I want to sell an odd money naked call option on something. I'm waiting. Pull down here. Pull down here. Why pull down here? Because generally speaking, when the VIX is going down, the stocks are going up. So what I want to see happen, what I think is going on, we'll look at these 4 major indices. We already saw we looked at the futures of them, but look, price action moving down from, at least on the month, down. Here's the beginning not the beginning of December, obviously, we're in December 4th, but roughly about 30 days of trading. Prices are here, now they're down here. We're below a downward sloping 200-day moving average. We see it, tested it, failed, came back up, tested again, breakout, fail. And then look at this one. Here when it tested it, wasn't even close to the 200-day moving average. Down below a downward sloping 200-day moving average. Down below a downward sloping 200-day moving average. Tested here, failed, tested here, failed. Down. Potentially going sideways. This is the only one that's not below the 200-day moving average. And look at the 200-day moving average is flat. Price action is going down. So there's a good chance prices could go down a little bit more. How much more? I'm not sure. So I want to see a rally in the market. I want to see this particular equity that I'm going to be selling the naked calls on. I want to see it rally up. I want to see fear leave the market. I want to see fear drop down from 22 down to 20. I want to see that stock rally up, which will give me more premium for selling at this particular strike price that I've predetermined on that stock and already on the I know which expiration date I'm going for. I know what strike price. I just want this to drop down here. If it doesn't, I'm going to have to do something else. But I'm watching and drooling in the meantime. So we took a look at those. Let's take a look at these 12 sectors. Overall, you can really quickly get an idea of the past, not the future, but the past by looking at the 200-day moving average. Right? We have 12 sectors here. 2, 4, 6, 8, 10, 12. Down, 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 down. What's going up? Up, up. That's it, right? Flat, flat, flat. Flat was starting to kind of turn over. You know, can't quite count that down. You know, could even out flat. But so what does that tell us? It tells us overall that the stock market has been down to sideways. And what are we seeing? I think we're going to be seeing a lot of sideways consolidation. I'm seeing sideways consolidation right here. I'm seeing, right, get this little drawing tool. Right? Some sideways consolidation basically right there. Sideways consolidation right in through here. Now this one, that's up. Sideways consolidation. Sideways consolidation. This was sideways. Look at that. It's going up. Now maybe the range is going to increase. Not sure. But definitely right here's if it were to stay in alignment with that, we got that sideways consolidation. What do we got here? Not as obvious of a sideways consolidation unless you're looking at this wider range like that. Down, right? Starting to get some sideways consolidation. I don't really see any sideways consolidation. It could, but 2 days isn't really doing it. 3 days, that's kind of not really doing it. So what do you see on that? This is kind of what I'm seeing. What do I see here? Sideways. All the way up here like that, right? But it's pretty volatile in that sideways. This had a sideways consolidation. Boom, something broke out of that. Kind of sideways, started breaking out. So on a short term, like we see, okay, this really, maybe it had a sideways consolidation right in here a little bit, but things that are breaking out, 1, 2, maybe 3, maybe 4. So if that continues, okay, it could be the beginning of a reversal. It could be, doesn't mean it will. What else could we look at to get a better? Ooh. Could look at this. What do we see there? Look at that. Turning up a little bit. Let's put it in a context though. Right? Look at the context. Down. Right? It's been going down. Now we're floating on the dealing with the top half of this downward channel. Which if you're a bull, that's good because it's not the bottom. The bottom part of the downward channel. It's the top. Now look at it, got to about right in there, right? Prices came down to about right in here, kind of started turning up. So I think it might even be months. I think it might be months. I know it's at least weeks, but could be months that I've been saying. I wouldn't be surprised if we end up leaving this bear market through a sideways, grinding sideways. But until we're really like, until maybe our prices are, I don't know exactly where, but we really gotta, because right now it's just kind of following the top of this. If it kind of keeps doing this, it's, you know, it's still going down. It's not moving sideways. In order for, we got to see something more like, you know, kind of come out of it where it's like we see it's going sideways. It's not going down anymore. So what are some things that you could do in your paper trading account to potentially practice on, and while we're waiting to see exactly where things are going to go? Well, the way that I do things, and this is not strategy recommendations, it's not advice, it's not anything like that. It's for educational, so you can test things out to see if it works for you. So the stock market, it can basically only go one of 3 ways. It can go up, it can go down, and it can go sideways. That's it. So at the moment, barring some form of financial engineering via the government, via the quasi-government agencies, all that type of stuff, which I lump them all into one category of the government. That's how I see it. Even though the central bankers are not elected, I still view them as the government. And I know, you know, I get it. If I'm taking a ASVAB score, ASVAB test, or college SAT, I'm not going to get that right. It doesn't meet the technical definition. But I think for practical application, I think when the thing with trading and investing is you might know the right answer to score 100% on a test, but that's not necessarily what makes you money. So it's up to you. You decide if you want to be able to answer theoretical tests correctly or if you want to make money. Me personally, I'll take making money over first and anyways. But unless the government does something like they were doing here, stimulating, right, all in there, I don't see this changing to this without something like that. I think that's possible. I think it could be in a tighter range, even like this. Not that I don't think up is not possible, but I think it's the least probable. And how far does the government want the market to go down? How far do they want it to go down? I don't know. I cannot I personally myself do not believe that they would allow it to go down, significantly go down, unless they were planning and prepared for it to go down. So if we do see it go down, I don't think it's, I mean, I think it's possible that it could catch them unsurprised, but I think they're a bit smarter than that, even though there's a lot of people that want to give YouTube commentary and talk about these people are dumb. No matter what side of the spectrum, no matter if you're red or blue, you call the other person dumb. And so no matter how dumb that your favorite talking head or social media influencer says these people are, I don't think they're that dumb. That's my opinion. Maybe I'm that dumb that I would think that they're not dumb. But so I think it's possible that we could see this grind this way. I definitely think it's also possible that it could drop lower. I think that it's possible, but not very probable. Now, out of these two, going down sideways, going down sideways, going down or sideways, which one do I think is most likely? I think down sideways is most likely. Yeah, I'm not 100% sure which out of which one. So because you know what's so for me personally, what's great is that I don't have to. I trade in a way where I trade in a way where the majority of the time I have a lot of wiggle room to be inaccurate. When you are a net seller of options, you have a lot of leniency to the market to be less than accurate with your price predictions. So for example, like what I was saying, I was trying to get at this, right? I think it's possible that we could see a wide range of about right in there. Now let's say, give or take, you know, a little more, a little less, right? And maybe a tighter range of about right in here. And so if the least likely scenario is a continuation of this, and again, and just so you know, I'm not talking about this specifically trading S&P 500. I'm talking about any particular equity, but looking at the S&P as an overall proxy for the whole market. If the whole market has the least likely scenario without some sort of program that would give similar effects of quantitative easing, but they would probably call it something other than quantitative easing. And if somebody asked them if it's quantitative easing, they would come up with some sort of theoretical gobbledygook of how it's different, but the result would be the same. It's kind of like, hey, I heard you punch your wife in the face. No, I didn't punch my wife in the face. I elbowed her in the face. You know, like, what's the difference? So what? That result is the same. I'm beating my wife. Don't take that out of context. I'm not married. I don't put my hands on people. Not in a negative way, at least. And so, so if the least likely scenario is to go up, you know, maybe like, look at this. High, lower high, lower high, lower high. How far away from the money? Look to the left. Look over here. Oh, right there. Where is that? And that line is terrible. I gotta switch this. Look to the left. Right in here. Okay, where's that? How far away? How far away you want to go? You want to sell? You want to sell over here? You want to sell over here? Where you want to sell? Sell somewhere where you're going to get paid to accurately predict where the stock's not going to go. Now think about the difference of that. What most people think is the majority of people only know how to make money if the stock goes up. Majority of people understand a 401k. If they buy at $5 and they sell at and it goes up to 10, even though they didn't sell. Let's say they still own the equity. They bought it at 5. Now its market price is 10. They think they made $5. In fact, until you sell, you actually haven't made any money. You might have quote unquote kind of increased your net worth, but this is just on paper. This is not putting gas in your car. You don't have $5 to put gas in your car here. You got to sell. You got to close this position, and then you'll have that $5. So most people, that's what they know how to do. They think that you got to be able to buy low and sell high. That's why they'll say, like, what do you think about stock XYZ? Because they're talking about, is it going to go up? Is it going to go up? Is it going to go up? What should I buy? Should I buy this? Should I buy that? Because is it going to go up? That's kind of what they're referring to. So what they don't understand, and what I hope that you do understand, or you're beginning to understand, is that there are other strategies out there that you take advantage of a counter trend trade. So the stock market, let's say it's moving down, or let's say it's moving sideways. So you do something, you sell something out here because it's a very low probability that it's going to go here. In fact, if you were to do this on the S&P 500, which I don't recommend you do because it's not suitable for you, but if you were to sell, like let's say at 480, let's say if you were to sell call options at 550, and I have no idea if there's any premium there, but let's say you were to sell a call option, right? Sell a call, 550 call, and you're selling it, so you're negative a 550 call. And the expiration date, it expires, let's say, in 30 days. 30 days to expiration. What's the likelihood that you think S&P 500 is going to go from 383.76 to 550 in less than 30 days? How probable do you think it is that it's going to get through this level of resistance, and then this next range of resistance, get past this high, then go through this level of resistance to get past this high, and then to go up there? How likely is that to happen in the next 30 days when this is what you're dealing with? You're dealing with, look at all that sideways to downward movement, and here it should make it really, really easy. These are the 4 big indexes of the stock market. So overall, you could say between these 4, you're basically looking at the entire market. What do you see that's moving up? You see anything moving up there? 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 Nope, you don't. You see anything above a moving average? You see one. What's that moving average look like? Flat. What's the price action doing? Down. How about everything else? Below a downward sloping 200-day moving average. Price action moving down to sideways. Below a downward sloping 200-day moving average. Price action moving down to sideways. Below a downward sloping 200-day moving average. Price action moving down to sideways. I think I lost my... So how likely do you think it's going to be in the next 30 days? What do you think the probability would be that it is going to get up there in the next 30 days? Well, actually, we could take a look at it. This is an option chain. Here's a 30-day expiration. Let's drop this down. Well, it doesn't even go to 550. Look at that. It doesn't even go to 550. So even if you wanted to, there's no premium there. There's no strike price at 550. The highest it's going to go is 250. But what's the probability that it's going to 250 in the next 30 days? Let's look. Let's look at the delta and use the delta as a rough estimate of the likelihood of it expiring in the money. You know what the probability is? 0. Statistically, there's 0% chance that in the next 30 days that the S&P 500 is going to be at $550 because there's 0% chance that it's going to be at $250. If it can't make it to 250, it's definitely not going to double that or almost double it and go to 550. Now, in the next 30 days, just based on delta, right, there's more. You don't want to revolve your whole trading, philosophy around the delta. It's not the most accurate of projecting in or out of the money, but it's something that you could use. So, but where do we see finally? We got all these zeros here. Here finally we have a delta of 1. At what price? 180. So what does that tell you? It tells you that this is an extremely low probability. In fact, look, where's the price action at? The price action is around right here as far as in the money. It's right where this changes. What's the actual price? 126, right? 126, 127, 126 and some change. So how about 126? How about at 150? What's the likelihood that it's going to hit 150 in the next 30 days? Look at that. 6% chance. So my point with all this is that you can make a lot of money if you accurately predict direction. But you can also make money by picking the direction it won't go. There's 3 directions it can go: up, down, and sideways. Can you look at a market and can you figure out which direction it's going? And can you implement a strategy that profits? Let's say the market, as we're seeing right now, is going kind of sideways to down, down to sideways, something like that. Can you find a strategy that would be profitable as long as the stock market doesn't go up? What if the stock market's going up? Then you find a strategy that's profitable as long as the stock market doesn't go down. All right, so it takes a little bit of understanding the way things are, but you got to keep it simple. At least I had to keep it simple. There's only 3 ways it can go: up, down, and sideways. There's strategies that can profit in any direction. You say, hey, the stock market's going up. What are the strategies that can profit when I'm going up? There's more than one. It's not just buy. It's not just buy low and sell high. What are the strategies that can profit when the stock market's going down? What are the strategies that can profit if the stock market's going sideways? And then I get a paper trading account and I start testing out these strategies. I've already been doing that. When I say I am really meaning you get a paper trading account. You practice those strategies. Learn what's suitable for you. So that way you don't have to rely on the suspect opinion of other people. I recommend that you learn how to become your own financial advisor. With that, my friends, I don't know how long this video has been because my recording thing disappears on the minutes. But I hope that was helpful. Right? There's 3 directions the stock market can go: up, down, and sideways. There's a way to profit no matter which direction the market's going. You can quickly look at this. Now, is it going to give you 100% accuracy? No, but it give you a general gauge, right? Hey, there's 4 big indices of the stock market. What have these indices been doing? Well, over the last 200 days, been going down. Where is the price action in relationship to that? It's below it, and it seems to be moving down to sideways. It's above it. This is going sideways. What has it been doing over the last 200 days? It's been going sideways. What's the price action doing in relationship to that? It's above it, moving down to sideways. What's the price action been doing in over the last 200 days? It's been moving down. Where's the price action at today in relationship to it? It is below it, moving down to sideways. What's the price action been doing over the last 200 days? It's been moving down. Where's the price action today in relationship to that? It's below it, moving down and sideways. So what do you think would be the least likely outcome in the next 30 days? Probably up, huh? And there's more to it than that, but don't overcomplicate it. Keep it simple so you can understand the big picture. Robert Kiyosaki talks about context and content. Look for the context first. Figure out the context first, and then start figuring out the content. At least that works for me. You guys have a fantismo day, which is a word I just, kind of sort of quasi made up to mean fantastic. Aloha.